Well, holy smokes, everyone. What an absolutely wild day it was today in the markets. Just as people thought that the stock market meltdown was over, well, it's looking like we may be about to enter round two. So, everyone, it was an absolutely huge day in the markets today. Lots of news, lots of information, lots of data. So, let's not waste any time. Let's get straight into it. Look at this, everyone. Stocks tumble as Facebook earnings induced rout and tech Nasdaq fell 3.7%. Now, I pretty much covered what's going on with Facebook in my previous videos, but this caused broader fear in the Nasdaq and with all these other large cap tech stocks. And we'll quickly have a look at all the major indices. Gold was down a little bit, down 0.27%. Silver got hit much harder, down 1.33% to $22.40 an ounce. But look what's happening with oil. WTI crude is now over $90, up 2.4%, and this is going to be adding more pressure to inflation. And a 10-year US Treasury spiked today. It's now up to 1.84%, so it's looking like the market is starting to price in more rate hikes. But it was a very strange day today. We pretty much saw a sell-off in everything, even the dollar. Look at this, everyone. Even the dollar today sold off, down 0.61% to 95.35. So I don't know about you, but it seems unusual that bonds sold off, the dollar sold off, all risk assets sold off all at the same time. Normally what we see is risk assets sell off and then a flight to safety. But no, we saw everything sell off. Bitcoin didn't get hit too much so far with the sell off. It was only down 1.6% today and it's still hovering around that 36,800 level. But we need to talk about today what exactly happened in the stock market, because people, it was another bloodbath on Wall Street. Look at this, everyone. The Dow was down 1.45% and we saw the sell-off accelerate at the close. The S&P was down about 2.5% as well. And like we've continued to see, the Nasdaq is getting absolutely hammered. It was down 3.74% today, and we now look on the year, it is still down 12%. What you're probably wanting to know is the worst over and are we at the bottom now? Well, everyone, let's have a deeper look. Now it's all coming down to earnings, and people, we have a very mixed earnings report. So Ford reports mixed first quarter results as chip shortage eases. And we can see that Ford stock is down 3.7% in the after hours. So listen to this. Ford sold 1.9 million vehicles in the US in 2021, down by 6.8% as it managed through the global shortage of semiconductor chips. The parts problem forced Ford and other automakers to sporadically shutter plants and depleted vehicle inventories. And I guess it was due for a correction because the share price did rise 140% in 2021 as it announced it's getting into electrical vehicles. But again, it was really Facebook that started this broader sell-off in the tech sector, and that's what caused the fear across other social media platforms. The other social media names followed Meta today, with Snap shares 23%. But look what's happening now in the after hours now that they've reported earnings. So of course, when the share price falls 25%, it takes about a 50% increase to get back to where it was. So Snap shares rocket 53% on first ever quarterly net profit. So I do expect we're going to see a short-term bounce tomorrow in all these social media platforms because they're technically oversold in the short term. But the fears about what the Federal Reserve is going to do and if inflation is going to get worse or not is still here. We saw in Europe that inflation is getting worse. We saw the ECB become more hawkish, and Christine Lagarde finally admitted that inflation, the risk have tilted to the upside, and it's looking more likely that they're going to lift interest rates in 2022 because before this latest inflation data of 5.1%, when they expected 4.4%, they were saying it's very unlikely there'll be a rate hike this year. And not to mention the gas crisis they're having in Europe and also all the geopolitical risk as well. Listen to this. All assets have a different value than they did. You have this wide range of assumed rate hikes and you're trying to reprice all these assets based on that assumption, taking into account what they're saying for future earnings. And in the past, all you had to do was buy the dip and you'll be okay. When now investors are starting to say, look, if I buy the dip, show me, prove me that I'll be okay with your earnings. For all my stock market bulls, you did get a glimmer of hope today. So Amazon shares roar on cloud revenue beat and huge profit gain from Rivian stake. And as we can see in the after hours, Amazon shares have surged 17% after we saw a huge sell-off of 7.8%. So I think what most investors did, they sold off Amazon first and waited to see what their earnings were going to be. And luckily for Amazon, they did beat their earnings. I think this will lift the market and lift sentiment over the short term tomorrow. So listen to this. Amazon on Thursday said revenue climbed 9% in the fourth quarter, and the company reported a gain of almost $12 billion from its investments in its electrical vehicle company, Rivian. So earnings per share were $27.75, but I can't see what the estimates were. And AWS revenue was 17.8 billion versus the 17.3 billion expected. Amazon also disclosed revenue from its fast-growing advertising business. For the first time, advertising services grew 32% year over year to 9.7 billion during the quarter. But like I've been warning about with the labor shortages, with inflation and supply chain issues, Amazon got hit by these issues as well. So Amazon CEO Andy Jassy, who succeeded Jeff Bezos last year, said the pandemic continues to pose challenges. Facing a tight labor market, Amazon last year hiked wages to an average of $18 an hour to lure workers, still pretty low in my opinion, and has increased its incentives, offering sign-up bonuses worth as much as $3,000 in some markets. That's absolutely crazy, everyone. $3,000 sign-on bonuses, and I think this is only going to get worse. As expected over the holidays, we saw higher costs driven by labor shortages and inflationary pressures, and these issues persisted in the first quarter due to Omicron. And I think what investors would have liked is Amazon hiked the price of its Prime membership for the first time in 4 years. The company said it will raise the price of its annual Prime membership to $139 from $119. The cost of the monthly Prime membership will also increase to $14.99 from $12.99. The price change will go into effect for new members on February 18 and for current members after March 25th. So everyone, what the bottom line is, this was a very mixed earnings season. We're continuing to see companies have been hit by inflation, by supply shortages, and also labor shortages. But now all the major companies in the S&P 500 and the Nasdaq have reported earnings, so I think we don't have much good news to look forward to in the stock market in the future, because now all we have to look forward to is rate hikes from the Federal Reserve, more inflation data, and we're also seeing the job market and the economy start to weaken as well. And like I said, all these company earnings are from last year in 2021, when there's still leftover savings from people's stimulus and when people were piling on more and more debt on their credit cards, which are getting very close to maxing out. So I think Q1 of 2022 is going to be very different, and I do think we're going to see companies' earnings fall. So tomorrow I do expect a bounce from this violent sell-off that we had today, but over the long term, I don't think this stock market sell-off is over yet. But everyone, that was just a quick update with what happened in the markets today, some reasons why the stock market fall and the other indices. But what do you think about this? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.